Hello. Welcome everybody. Welcome to the webinar today in terms of the emergency webinar to see where the markets are heading from pretty much now being month of June till pretty much the end of the year and forward. So let's go through and have a look. Before I'm going to begin, actually, part of disclaimer, please know that our personal recommendation or everything that you see here today does not constitute advice. There's always an element of risk when trading, and trading can result in financial loss. You must seek specific advice from your advisor before taking any action. No warranty or guarantee is given regarding the accuracy or reliability of our report. And Line of Trade Education, RS Universal Trading Pty Limited will not be liable to any person for any loss or damage arising as a result of its use. For permission to use or report material, you must accept full responsibility for any action that you take. Past results are not considered a reliable guide to future results. Testimonials herein are both unsolicited and solicited and are non-representative of all clients. So, just basically just a short disclaimer just to make my lawyer happy. And other than that, we're going to look at the Dow Jones. We're going to look at the S&P 500. We're going to look at the currencies, currency markets. We're going to look at gold, oil, perhaps even silver. And we're going to look at stocks. And if you have any stocks that you might have, just let me know, and I'm more than happy to have a look at it as well. Alrighty, other than that, let's begin and let's continue. Alright, let's go through first on what happened with the markets last week. So as you can see, even though some of the reports were on the positive side, the market still pretty much tanked. Let's say, for example, in Australia, construction work done 5.5%. Euro, they were pretty much on a good note, but still the euro pretty much tanked to the downside. And likewise for the private capital expenditure being on a positive side. At one point it went up, and then the Aussie pretty much dropped. Being Thursday, nothing really. And the Friday, we have a non-farm employment change, which was a really big reduction in the U.S. Unemployment rate increased by 0.1%. Hence, that's what caused the market to drop about more than 200 points in the Dow last Friday. All right. Any questions before I start as well on my end? Issues, challenges? Okay, nothing. Okay, let's go through first. Let's look at the marketplace in general. I'm going to start with the Dow Jones Industrials average. Looking first on the monthly chart. And let me go through looking at the 5-year chart very briefly. So if I'm going to put here for 1 second, extend that. Based on the primary uptrend, I'm not actually even surprised that there's going to be a little bit more of a retracement. Overall, I am still I'm still bullish in the markets, but as per what I have stated from the last market update, that there's going to be a retracement. So remember, we are in an uptrend. We have a higher highs, so higher high, higher low. It was just pretty much predictable from here, especially April when it created that doji cross right there. So in other words, pretty much just a shooting star, and then created a new high at the very beginning of May before it pretty much tanked to the downside. So this was already the key. In terms of risk and probability, the risk was so small that the probability of it retracing to the downside is pretty high. Worst case scenario, even if I put on one right there, I'll take the high. That high based in 2008 actually got broken. And then the next one will be, I'll choose the high of this bar right there. So approximately 13,789. and then the high of this was 13,338, 13.7, so that's about 400 points in terms of the range within this high. So if you went long, yes, the risk would have been pretty small still in terms of a risk point of view, and then the probability to go up was a little bit lesser because of this uncertainty right there. And in terms of seasonals, May is always a bad month. If you go back in time, May is always pretty much always comes back down. Okay, now if I draw around here, put a support line. This one right is 11,773. And there's an odds and probability that it will drop furthermore here. And when I say odds and probability is actually pretty high. And if you notice from May, there's a lot of momentum to the downside. And now we can see as of Friday, the 12,200, what I mentioned earlier, pretty much got broken. And there's more strength. It's continuing to the downside. Because of such a momentum, what we want to see is a stabilization. Now, based on a monthly, it's not even showing some form of stabilization. But remember, it's just the beginning of June. But there is some more room in order for this to drop around this level. It has a range between 12,000. So right there, 12,936. That's less than 100 points to the downside, all the way down to 11,700 area. So there's a range between for a good level of demand from this point. So definitely for the next month or so, there's still more sellers to the downside. Okay, in terms of longer term, because this is a monthly chart. And if I put, if you want to be more objective, and then put a fib pretty much from top to bottom. And let me expand this for 1 second so you can see it. Okay, to make it more objective, 38.2 around the 12,229, which is the high of this. The opening, so the close of that, the opening of that, also within